Good afternoon and welcome to NYFP. The Dow and S&P 500 remain elevated on this noon hour. Joining me today to weigh in on the latest is Ben Willis of Albert Fried & Company. Ben, good afternoon. Thanks for joining me today.
Pleasure to be here. Thank you.
Well, U.S. stocks have turned higher throughout the morning, and the Dow and S&P 500 have hit new intraday highs, and this does come after those indices hit record highs, closing highs in the previous session. Now, we got some data in terms of jobless claims, and they fell more than expected. And over in the Eurozone, we saw a healthy demand for Italian bonds in the latest auction. But given what we're seeing in the equity levels, what do you make of what we're seeing?
I have no idea. I don't know. This has been one of the great bull runs I've seen in 30 years. I mean, it defies professional expertise. We should have seen a correction by now. We have not seen it. We're in uncharted territories. We continue to climb. Somebody asked me the other day, where's the next resistance? Because you can pick any number you want, whether it's 15,000 on the Dow. They're all make-believe numbers at this point. Not to denigrate technical analysis, but that really has not worked, because every technical analysis you've looked at would have, again, suggested we need a pullback. So it's been a great run. The idea behind it is that the world economies are getting better, not as fast as we'd like them to get from a professional perspective, but the money that is coming into the equity markets continues to drive this in search of yields. The places that the money seems to be going are defensive issues like utilities, classic areas of retail investor. That doesn't mean the retail investor is wrong. If you held that theory and did that in the bond market the last 4 years, you would have been carried out on a stretcher. So that's what we're fighting, regardless of what anybody, my perspective, may be. So I'm just waiting for the bull finally to get tired enough to take a rest.
And Ben, I can't ask you about technical levels, of course, given where we are, but I do want to ask you your take on central banks. In the past week, following the Bank of Japan and the FOMC meeting minutes, which did come out earlier than expected, there is concern about what could happen going forward. But what do you make of the central bank's recent actions, and what can we expect to see in the near term?
There's not a single entity on the face of the earth that can fight the central banks when they put themselves into motion. You see what's going on with the Bank of Japan and their recent moves and the volatility in their bond market. With the United States of America, again, I thought we would have seen a little bit more of a pullback today with Mr. Plosser's commentary, talking about somewhat slowing down. But you know, from an equity perspective, a slowdown of quantitative easing is a luxury problem. That's an indication that the economy is in fact getting better and justifying the prices that we're paying on equities from that point of view. I would not want to be in the fixed income market right now. I wouldn't have my widows or orphans funds in that place with that interest rate risk. So fighting the central banks has been a losing battle, no matter what you believe in. And as far as the release of the minutes, I know everybody wanted to talk about it, but the fact of the matter was, it was a legitimate mistake. It was a benefit that the central bank was normally would send to somebody after it was released in case they weren't watching on TV, so they had a print form of whoever got it. So there was no nefarious undercurrent to the whole situation. It's just something that was fun to talk about. But here we are, regardless of what's going on, and the central banks continue to rule the day.
And last but not least, Ben, earnings season has kicked off. Not too much attention was paid to Alcoa, but tomorrow we have financials including JP Morgan, Wells Fargo reporting. And we do get a batch of economic data in the form of retail sales, consumer sentiment tomorrow morning. So what do you expect to see tomorrow?
Well, again, Alcoa, you and I have talked about it. Alcoa, to me, is like the Princeton-Rutgers football game. It was a tradition in the college sports, but it wasn't very pretty to watch in the end. Same thing for Alcoa. It has not been a great indicator of the season, although if you want to, for this year, this quarter, they seem to be a little bit better. And as far as retail sales are concerned, I think that will be some important numbers to continue to look at driving this market. But if my own analysis is correct, the traffic on Route 17 in Paramus has been horrible, which should mean that at least retail sales out of those stores are great.
Okay, Ben, well, thank you so much for your insight, and thanks for adding a touch of humor to your commentary today.
My pleasure, thank you.